We stopped at lot sizes and we've expressly spoken about that one. So we are just going to leverage before we now go to spread. Okay. What is leverage? Let me use a typical example for us. Let me use somebody's name in the group. Let's say, for example, Abdurazak Jimo, that is on this group, works in Aso Rock. And then I want to see the president. As a normal citizen, without any appointment, I cannot easily get access to the president. I can now use the leverage of Abdurazak Jimo to see the president. I can use that leverage. That is what leverage is. Using the influence of a bigger authority to get what you want. I can now talk to Abdurazak and say, bro, I want to see the president. Oh, you be my guy. The only way I can see that president is if I can come through you. Then Abdurazak uses his influence to grant me access into Aso Rock, into the Aso Villa. I have leveraged on Abdurazak's influence. When I was teaching my other students in my 10 for 10 group on my other WhatsApp, this was the same example I gave to them. And I think this is the best example to teach leverage. Now, you don't need to cram leverage because you will not be needing it throughout really in your trading journey. The only time you need leverage is when you are a broker, which I shared the video yesterday using hot forex with the Williams effect. I hope you guys went to watch it. I'm going to still share the link all over again. That is what leverage does. That is what leverage does. Leverage gives us the opportunity as small forex traders to be able to access the global market with our $10, with our $5. When I was growing up, people coming to meet our parents and say, come and invest in forex trade. But then they would tell our parents to bring some amount. Back in the days, if you did not have about $100,000, you have no business talking about forex. How many of us can afford $100,000 here? I'm talking about 46 million naira. How many of us can afford it? I can't afford it. Are we guys together? But the brokers have given us a leverage into the forex market with our small $10 and $5 and $15 and $100, $1,000. In short, to the traders and what's the name of these guys? The brokers. A $1,000 account is a small account. Somebody was doing a video on YouTube and was saying trading with a small account, and then he started his video with $950. We're like, bro, that's not a small account. That's a very big account. But to the brokers, that is a small account. So when you are registered with a broker, they give you option to select a leverage. The simple thing to do here is this: select 1 to 500 or 1. If you watch the video I shared yesterday on the group, you would have seen it. Where I said use 1 to 100 or use 1 to 1,000 when you are trying to register on the broker with your leverage. It's not a big deal. It's not something that you should cram too much, but it is something that you should know when you are registered with a broker. 1 to 500 or 1 to 1,000. It makes your $1 look like you are trading a $500,000 account. That is what it means. You are leveraging on the influence of your broker to trade the large financial market. So if you have $1 in the eyes of the market, low Georgia, okay, in the eyes of the market, it will be like saying you get $500,000. That is leverage. If you go and select 1-to-1 in the eyes of the market, that means you are trading your $1 like $1. You will be limited to the type of lot size you can use. Very, very limited. And you don't want to be limited. You want to see a market doing its move and you're able to milk that market. Like gold. Some of us on this meeting, we must have been trading a little bit, or even some of us may be gurus. Gold is very volatile. When gold wants to move, it moves like a crazy market, very crazy market. Gold USD. That's XAU USD. It moves very crazily, very rapid and very fast when it's in its zone, when it wants to move. Very rapid and very fast. Can you see this? Okay, let me show you this. Let me show you this quickly. Drop. Can you all see this drop? This was fast. Very, very fast. Created the structure and it dropped. Created a double bottom and then it went up. If you used a good leverage, you would have been able to increase your lot size and milk this market. If you had a $50 account, 0.01, and then you see this kind of drop happening and you've gotten your confirmation, you should increase your lot size. Personally, I would advise you increase. If you are in my group, my mentorship group, I will drop a signal there immediately and tell you guys, oh, increase your lot size. Oh yeah, increase your lot size. We are milking this market immediately. That is what it does. Use a good leverage. I am teaching you so that even if you want to teach somebody else, you will know what to say. All right? Because when I'm teaching somebody, I teach somebody so that the person can go and teach people too. Hiding any information. So we move. That is what leverage is. The next thing we'll talk about is spread. I hope you guys are following. I don't think they wrote anything about leverage in this book or spread. It's not here. Likewise here too, it's not in this book. No leverage, no spread. Okay. So it is simple. So we talked about pips. We've talked about lot sizes. We've talked about the movement in pips and how it works with your lot size and the kind of account you can trade with lot size. And now we've talked about leverage, 1 to 500 or 1 to 1,000. Now let's talk about spread. Now let's quickly talk about spread. If you watch the video using MT4 with the Williams, I showed you where the spread is. If you open your MT4 and you go to the quote session, you will see the spread there. That the currency pair. On the first currency pair is always Euro USD. That is like the base pair for everybody. That mostly determines many moves. You would see Euro USD. You would see volume. You would see time. and then you see spread. The spread is determined by the number of people in the market at that time. Sometimes you see spread will be 20, spread 15, spread 30. Your spread is determined by the number of people in the market at that time. The higher the spread, the lower the people in the market. The more people in that market, the lower the spread. And when you see a pair, the spread should be low before you enter that trade. Don't enter a trade when the spread is above 20. Anything above 20 would be detrimental to your accounts. If you have a pen, write that one down. When you are trading, check the spread before you take your trade. Anything more than 20 on the spread might be detrimental to your accounts. Always check spread. Always check spread. It's on the video, and I would like you guys to go and look at it. Now, to the business of the day. Types of orders. Types of order. This very type of order and the candlestick patterns are the two major topics for today that I really love us to treat and work on very well. So that when we are moving into tomorrow's topic, know what we are doing. Okay? Now, we have 5 types of order in the market. 5 basic type of order. I'm just going to type it out here. I hope you all can see my sticky note. 5 types of market order. We have the instant execution. We have the buy stop. We have the sell stop. Buy stop. We have the buy limit. And finally, we have the sell limit. These are the 5 types of market orders that we have. These are the 5 types of market orders that we have. Like this. Okay? Instant execution, buy stop, sell stop, buy limits, and sell limits. Now, let us quickly look at them one by one. Let us look at them one by one. At the order. Instant execution. First of all, a market order is an order to buy or sell at a current market price. That is the market order. If I say I'm buying, I am placing an order. Likewise, if I say I'm selling, I am also placing an order. So market execution, market order is an order to buy or sell at a current price. For example, I'll use a live example. I'm using a live example from AUD USD right here. A live example from AUD USD. I want to enter a trade. Where is the market currently? That's the first thing I will think about. Where is the market currently? The market is at 0.070858. That's where the market is. Okay? 0.70859. Now, at this very point, you can see it by the left here where my arrow is. That's where I'm seeing my market point. If I use this cross, you will also see it on your right, on the right side. Okay. Now, if this is the particular price, I want to enter the market. I don't know whether I should go up or I should come. Although this market is not telling us anything currently. It is on a downtrend. The market is on a what? The market is on a downtrend. And then right here, it is ranging. It is ranging, going up and down. It's ranging. Like I said in the morning when I was talking to the guys on the candlestick formation, we have a downtrend market, we have an uptrend market, and finally we have a ranging market. Currently, this is a downtrend. This is a downtrend, and this is a ranging market. It is ranging. It is going up, coming down, going within the same square. Let me, guys. Within this square, the market is going up and coming down. It is not. It is neither doing an uptrend or a downtrend. It's just moving the same box. Unlike what we see here. What we see here being a down. And you see this. The market is falling down here seriously. So we have 3 types of market movement. 4 types rather. A downtrend, uptrend, ranging market, and a choppy market. A choppy market is just dancing within a spot. Most of the time, I normally say a choppy market is a consolidating market. So now, I have the price here, and I want to know where the price is going to. I want to buy now. I want to buy this market. Now, to buy this market, you don't just jump into the market. But for the sake of what we talk about, instant execution. You know that trade is going to go up. You know the market is going to go up. What do? You just go to your market, go to your MT4 and click on buy. You are not waiting for any confirmation. You are not trying to delay yourself. You just go there and press buy, and then the market, your trade executes immediately. Instant execution. Or you predict that this market is going to fall. Immediately you just go there, you click on sell on your MT4. I will share that video so you guys can watch it and understand better. You just click on sell, and then that is it. The market starts giving you money or starts taking money from you immediately. But if you are not an expert in forex, please, I beg you, don't use market execution. Okay? Because the spread might be against you, and you don't want to be in that kind of trouble. The spread can be against you. You don't want to be in that type of trouble. So that is market execution. Entering the trade immediately. Then the next one is buy stop. I hope we all wrote it down. Next one is buy stop. Now, I'm looking at this market right here, and I'm confused. Is it going to buy or it is going to sell? So I have more feeling. My sentiment is telling me that the market is going to buy. My justifications are looking right, that this market is going to buy. And why would it buy when it has waka waka since? Possibly they want to be a buy. So then, even though the market looks more like a sell, but then there was a buy. Then I create a pending order for a buy. I assume that when the market gets to this line I'm drawing now, I hope you can see it. Let me use red. Let me change the color to red. Now, this red line you are seeing here, I will assume in my mind that when the market gets to this red, it is going to start buying. So I go to my MT4 and I place my trade. I click on buy stop. And then I put my arrow here and I check where that price is. That price is 0.71005. I go and enter that digit on my MT4. Mind you, my order is a buy stop. I will enter that digit on my MT4. and I'm going to wait for the market. When the market gets to my entry point, it will put me. That is what a buy stop does. For me, I use buy stop and sell stop more. That's what a stop does. A pending order that when the market goes up to this particular level, it is going to start buying. And when the market comes down to a particular level, it will start selling. So this is for buy stop. When the market goes up and touches this I drew here, it will enter my trade immediately. And why would I decide that the market will get here? Because I know that when it breaks out of this box, there are chances that it will keep going up. That is what a buy stop does. Are we together? I guess so. Now, for a sell stop, you can be jotting down things. Please take notations. Now, for a sell stop, remember when we talked about buy and sell, bullish and bearish, long, short, uptrend, downtrend yesterday, right? Please let us not forget, because we'll be using those terms almost every time we step into the forex market. We'll be using those terms. Are we together, guys? I think my network is bad. Okay, let's stay together. I'm back. Now, we've talked about a buy stop. Now, let's talk about a sell stop. I have a feeling that this market is going to drop. Now, I come below here and I look for a particular point where I feel when this price drops to this particular point, it will continue to sell. Then I create a level. This level is at 0.70567. Then I go to my MT4 and then I click on sell stop. I click on sell stop and then I impute this number 0 point as my entry point where I want my trade to take me in. I impute that point and I put it there where I want my trade to take me in. And then I go and sleep. The market falls down to that point. Anytime the market falls down to this particular point from here or from wherever, anytime the market falls down to this point, it immediately enters my trade and it continues. Immediately enters my trade and continues to sell because I have created a pending order, which is a sell stop for the market. That is what pending orders do. Okay, I have created the pending order. So when the market moves to that point that I have selected, it enters my trade and starts moving my direction or against my direction. So as guys, I would advise you learn more about buy stop and sell stop. If you don't understand, come to my DM, ask me more questions about it. I'll be very glad to answer these questions because I want you to understand that buy stop and sell stop are the most important market orders that you will need to know as a beginner, not market execution. Please don't let somebody say they are buying, they are selling Euro GPY now, they are selling Euro GBP now. You will just jump to the market and go and click on sell. You need to go to the market, look at it yourself too. Is it really going to sell? And then you enter your sell stop. You create a level for the market. When the market gets to sell to this particular spot, I feel it will continue. Go continue that there. You will understand more when we are talking about technical analysis. It should continue from there. So the buy stop is the opposite of the sell stop, vice versa. Now let's talk about the next one, buy limit. A buy limit. Now buy limit looks a little bit complicated. People use it. I don't really use it. because it feels complicated to me. But I'm going to explain to you guys. You might have interest in it and it will work for you. Now, I have a feeling that this market will buy. But then there is another feeling telling me it's going to sell small before it buys. So I create a buy limit at this point. Now, this is not sell stop, this is buy limit. I create a buy limit at this point. When the market sells to that point, it will take in my order for a buy. That is what a sell limit, that's what a buy limit does. This is a buy limit. It will sell to a particular spot, then start buying. It is when it sells to that spot that I put in the market, that is when it will now take in my order for a buy. Are we guys together? That's when it takes for a buy. Now you're taking my order for a buy. So also is the sell limit. Now let me delete these guys. So also is the sell limit. I create my sell limit at this point. I assume that the market will keep selling. Like let us analyze this market together. This market was dropping all the way from here. And then there was a consolidation, a ranging market here. And then it became a little bit choppy here. I have a feeling that the banks or the big institutions are trying to gather people's money before they now go for continuation of sale. So they want to take people's money for a buy a little bit before they go for a sell. So I create a level here where I feel they will buy it to before they start selling. And then I create a... When that market buys to this point, hold on, guys. When the market buys to this point, it will take in my order for a sell. That's basically what buy limit and sell limit is. Buy limit, you will create a location below. When it sells to that area, it enters your trade for a buy. And for a sell limit, you create a when it buys to that area, it begins to sell. Those are the market orders we have in the market. We have in forex. The 5 market orders we have in forex. I believe you all understand. I believe strongly that we all understand. Today's topics have been candlestick patterns, calculate pips, how to calculate lot sizes, spread, leverage, and then market order. If you have any question, please raise up your hand now. I would like to take 1 or 2 questions if we have here. I will just wait for like 30 seconds. If nobody has a question, then I would round up and then we'll just candlesticks. I will share the video of candlesticks, which I did earlier. I completed the video and I uploaded it, so you would see it. So if you have a question, raise up your hand. I'm going to unmute you. If you have a question, raise up your hand. You and we'll move. We have that like 30 minutes to decide if you have a question. Okay, Adekonye, Tolulope, please. You can unmute yourself. Adekonye, you've raised up your hand.
Hello?
Yeah, hello, Mr. Adekonye.
Can you hear me?
I can hear you.
Hey, can you hear me now?
Yes, I can hear you now, Mr. Adekonye. Ask your question. Mr. Adekonye, we can hear you. Ask your question.
Hello.
Yeah, hello, Mr. Adekonye. Ask your question now.
Yes. Yes. Once it's about that buy stop.
Okay.
Yes. Once my trade hits that buy stop, like I don't understand. Is it going to continue buying? What about when the trade comes below my buy stop? Will I start losing my money?
I will answer that question now. Yes. If the market is like this and you create a buy stop level above,
Yes.
the market, what you are trying to tell the market is when the market moves up and enters that your buy stop, you
Yes.
buying.
Okay.
Are telling the market. That's what you have predicted for the market. Okay.
Okay.
So if the market reaches the buy stop and then now change mind, decides to sell, you will start losing. And the market gets to maybe it has given you small profit, then it jumps to the mid. You will start losing your money. Maybe it has reached your buy stop, it has moved up and starts going. You are in profit, and then the thing changes mouth and start coming down. You start losing money.
So how can I avoid that?
It is easy. Knowing how to do your technical analysis, that is how to avoid it. If you draw in your resistance, your support, and your trend lines well during your analysis, you should know that the market will get to a particular spot and continue to buy. And if you draw your trend line and support and resistance with trend line very well, during the market will get a particular spot and continue to sell. Don't draw example on my chart. Hold on. Let me see if I have analysis here. Okay, look at this blue line here. Can you see it?
Yes.
Good. This is support for me. I knew that the market will get to this blue line and start buying. So the blue line was here. The market dropped to this. It wanted to break that point. And as we can all see, the market touched that point and did what? And started buying. So knowing how to best way to avoid market going against you. We'll talk about support and resistance tomorrow. So that you are in the class. The more you are in either of them. Okay.
Okay. Thank you.
You're welcome. Yeah, brother. Any other question? We have like 2 minutes to go in the class. So, in the absence of question, just of any question, we've talked about candlestick patterns, which is very important. Imagine what happened here. Imagine what happened here. The green candle engulfed the red candle, swallowed up the red candle, and what did we see? The market pushed to the upside. We talked about an engulfing bar this morning, the bearish engulfing bar and the bullish. We talked about the doji, the dragonfly doji, and the greystone doji. Then we talked about morning star that forms when we have three candle formation. We talked about evening star, which is for a bearish market. And we had other ones to talk about, which I will share, I will give to you guys. Ensure you watch those videos tonight. Gather your questions. A lot of people have been in my DMs and I have been replying. If I have not replied in your DM, message me again. Message me again. I've been replying lots of messages in my DM. And I'm really excited that people are learning these things. Don't be left behind. Don't be the one to be left behind. Catch up, because forex has this spirit that once you out in a few seconds, you have to go and study on your own, and you have to study deeply to catch up. So don't miss out. Catch up. Ask questions where you feel you need help. I have some videos I've watched on YouTube when I was learning, and the ones I still watch. I've watched over 400 videos on YouTube, and I have two different mentors that learn for it. So I know most of these things. Ask me questions. I'm going to be there for you guys. This is just my help for you. See, we meet tomorrow in the morning session or evening session. See you guys later. Thank you guys for coming. Bye from Williams. Take care.